Chipotle reports second quarter 2024 earnings after the market closes on Wednesday, and it's pretty clear that expectations are sky high for the company as I'm recording. Price to earnings multiple on a trailing 12-month basis is 57, on a forward basis is 46. So that indicates that investors are expecting a ton of growth for the company. Just to put some guardrails around what analysts are predicting. This is from FinChat, and this chart shows a nice range of what they're expecting. The current expectation for the second quarter, for the June quarter, is $2.94 billion worth of revenue. And on the earnings side, analysts are expecting 32 cents per share in earnings. So that is the bar that Chipotle needs to hit. And there are a few things that I think investors need to keep an eye on, because this is, as a restaurant company, it's relatively simple to analyze the business. You're just going to be looking at how many stores are operating, how much revenue is each store operating, and then what are the margins for each one of those stores. So let's dig through each of those components in the business. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at some historical data and then what last quarter looked like, what expectations from Chipotle are. I want to start with the store count as a baseline. 3,479 stores in the most recent quarter. The compound annual growth rate was 7.4%. The other thing that has really driven revenue over the past nearly a decade, since the salmonella issues that the company had, is the company's revenue per store growth rate. Now, these are trailing 12 months numbers, and the compound annual growth rate of revenue per store, 10.1%. So you add those two things together, that's how you get a high growth business. But let's look at what we saw last quarter and what the actual drivers of the business was. Total revenue increased 14.1% to $2.7 billion. Comparables were up 7%. So that is a phenomenal number from a comparable sales number. You're usually expecting kind of the low to mid single digits number from a restaurant. So this is phenomenal growth for Chipotle. Shows that they're able to push through a little bit of price increases. That's something that's been pushed back on by consumers a little bit, but I don't think Chipotle has gotten to the point where you're going to see high prices be a huge problem at Chipotle restaurants. Operating margin, 16.3%, an increase from 15.5%. So this is going to be the operating leverage that you have in restaurants. So you're able to grow the store count, able to grow revenue per store. As you're able to do both of those things, you get more operating leverage in the business. So this is going to be a key number to watch, is what that operating margin number is. There is going to be a limit to how high you can push those margins, but they've done a great job of this in the past. Restaurant level operating margin, 27.5%. So that's extremely high. If we go down here to Outlook, what management is expecting for the full year is comparable sales to be mid to high single digit range. So 7% in the first quarter. Don't expect things to go to 10, 11% later in the year. In fact, they may taper off just a little bit. 285 to 315 new Chipotle restaurants. So again, you're looking at a store count increase right around 10%, probably a little bit under 10% right now. So that is what the business looked like and what investors and what has driven operations over the past few years. But there's a lot of things to watch with Chipotle as results come out. And this outlook for the remainder of the year, I think, is going to be really critical, because this high growth rate is something they've been able to maintain for quite a while. That's why the stock is as highly valued as it is. But is a company that's growing in the mid-teens growth rate range. Is that a company that's worthy of having a price to earnings multiple in the 50s or 60s? That seems a little bit of a stretch to me. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. And this is where those analyst estimates, I think, become really important for the business. Right now, between 2022 and 2026, analysts are expecting a compound annual growth rate of 14.1%. So that is an extremely high growth rate for a company that's at the maturity level that Chipotle is. Are they able to continue to raise their prices? Or can they get more people through their stores on a daily basis? Those Chipotle lanes seem to be extremely successful for them. I know that's something that I use on a regular basis, but is there a limit to how much you can actually push through a store? Is $3.1 million expecting a lot, or can that number go to $4 million on a per store basis, on a per store revenue basis over the next 5 to 10 years? If that is the case, if there is upside in revenue per restaurant, then this can absolutely be a company that can grow into its multiple. But the challenge is going to be if there's any sort of sign of weakness. if the same store sales growth rate is 3 or 4%, that's going to be a huge red flag for investors. You're also seeing that store count get to an absolutely massive number. So how long can you keep growing the store count at 10% when there's already 3,000 stores? There's definitely an opportunity to continue growing, but you are going to reach a level of diminishing returns at a certain point where you're going to be cannibalizing other restaurants, or you're simply going to have too many products out in the field. So we've seen this from companies like Starbucks, where you suddenly just have too many Starbucks out there. Are we going to get to that case with Chipotle? And this is fundamentally the risk, is when you have these really, really high expectations, there's a lot of downside risk. So that's what I'm going to be watching with earnings. This company has not seemed to do anything wrong over really the past 8 years. Since 2016, everything has gone Chipotle's way. They've continued to grow their store count, continued to push revenue per store higher. Those margins continue to march higher. But we have seen a huge correction in restaurant stocks over the past 3 or 4 months. And that's in part because consumers are starting to eat out less. They're starting to buy a little bit lower price ticket items. Now, does that mean that they're, instead of going to a sit-down restaurant, going to a Chipotle? That could actually be bullish for them. I know that has been the case in the past in recessions, where a company like McDonald's was actually one of the beneficiaries. I think McDonald's is actually in a position right now where they push their prices so high that they're starting to lose customers, and they're starting to have to pull back on those price increases that they pushed through over the past couple of years. That's where I think Chipotle has actually done a really good job of not pushing prices too far at this point. So maybe they are one of the beneficiaries that people are still eating out, but maybe aren't eating out at quite the expensive establishments that they have in the past, and they're looking to maybe get a faster meal from something like the Chipotle. On top of Chipotle's results, I am going to be looking at where there is growth in the restaurant business, because Chipotle is very, very highly priced now. But you look at a lot of competitors. One of the ones that I own is Portillo's. That is a very, very cheap stock compared to Chipotle, about a quarter of the price from its price to sales multiple. So it seems like there are values out there in the restaurant business, but is Chipotle just taking all the oxygen out of the room for everybody else because they have the scale, they have the pricing, they have the product that people want right now? That's something that we will learn a lot more about over the next couple of days. So a lot to process when earnings are released. I'm going to be back here on this channel to look at that earnings report, but I wanted to give an idea of where the bar is set for investors and what those long-term growth expectations are, because everything has gone well because this is absolutely a stock that is priced for perfection. And ultimately, I think that's the risk for investors, is there's not a lot of upside when you're already pricing in 14% growth for a restaurant company that is starting to reach scale at a level that very, very few other companies have. But what are you expecting from Chipotle? Let me know in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.